Good morning, traders and investors. Roger Scott here, Senior Strategist for Trading Pub. It's Friday, it's September 1st, and it's about 7:49 in the morning. The market's going to gear up to open up in about an hour and 40 minutes or so, give or take. Excuse if my math is wrong. Now, the Nasdaq is up about 27 points. The Dow is up about 120 points, and it's finally Friday. Now, remember something. Next week is a big holiday. It's Labor Day. It's the last major official holiday of the summer, if you will. It's also my daughter's birthday weekend. She was born September 2nd, and it'll be a fun weekend. Going to have barbecues. We got friends over. But anyhow, before we get into this video, and before we show you where the algos were hitting it and all the good stuff, I want to remind you, please like this video, subscribe to this channel. If you don't know where, just go to YouTube, type Roger-Scott. It's the Roger Scott channel. It's been rebranded from the Wealth Press channel. Like our video, subscribe to our channel, and subscribe to our Telegram channel. I posted a put trade yesterday. I post levels there. I post things all the time. I even post pictures of my assistants, the canine ones and the feline ones. Anyway, like, subscribe, and send me an email, roger@rogerscott.com. Nice and easy. Super easy. All right, let's get into it. So as you can see here, the Dow's up today. We've got some big reports today. We've got the employment situations, which will either confirm or deny the JOLTS report, which we had right here on Tuesday, that said the job openings are declining, which is deflationary, which really what's caused the stock market to climb above the 50-day moving average, and we're going to talk about whether it's going to stay there. You also have Bostic speaking, you have Mester speaking, you've got ISM manufacturing, and it's happening during market hours, so be careful, you may have some volatility. The PMI manufacturing is not going to be as important. The employment situation will set the stage for today. Now, I want to talk about algos, and I want to talk about where algos have been hitting it. So, as you can see here, if we back up and go to the 6-week, you've got energy, home builders, and QQQ. It's very mixed, but if you go to the last few days, they've been hitting everything that's technology-based. Look at this: technology, consumer discretionary, Invesco, home builders, retail, communication, all the speculative stocks that were all the way down here. So the funds came in hard and took all the stuff. Here, let me give you an example. Let me go back a week ago. Here, let me go back to last Friday. Here, let me just do that right here. Look at this. This is Friday, August 25th. Energy, healthcare, industrial, financial, blue chips. Look where home builders, retail, technology, communication services, all of this is in the bottom, right? Russell 2000, all of this is in the bottom. And now look at it today. Technology, consumer discretionary, QQQ, home builders, retail. Look at the Russell 2000. Look at the mid caps. All of this was down here. Everything, it was like inverse. This was on top and this was on the bottom. And in the last 4 days, they just came in and they've been buying it up. So visually, if I was to show it to you visually, look at that up move. 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 That's funds. That's algos right there. Hard buying. S&P 500 communication services. Google's making all-time highs or swing highs. NVIDIA's making swing highs. Adobe's making swing highs. Retail got a little bit of a boost. So I don't know if they're going to remain there, but boy, oh boy, they are definitely getting a boost. Now, as far as sectors that are leading, I would be really cautious with technology because it hasn't taken out this high. Consumer discretionary has not taken out this high. QQQ has not taken out this high. I need this to take out this high. So the only sector that I'm seeing that's near there is energy sector, which I've been telling you about it all week and last week. And let's see if healthcare or anything, healthcare, almost, not quite, but almost. If this high was just a little bit higher. So healthcare is still in second place and consumer staples is taking it under the chin. Look at this. I mean, horrible, not good at all. So right now, I'm cautiously optimistic with technology, but I need to see technology come up here. I needed to see it take out this strong resistance level on top. There's a strong resistance level on top. I needed to take it out. Strong resistance level on top. Till we do, no soup. So if you were to look at the SPY, here's Dell, by the way. It came out with great earnings. I said watch Dell. It looked really good. But if you were to look at SPY, I'll give you a few things to look at. We are above this red line right here. That was our resistance line. It became our support line this week because of this. But notice how strong Tuesday was, the JOLTS report, which is why I want to see if the market can follow through today. And look at the next 3 days, and volume wasn't high either, although it's summer. I want to see if we can hit the 458 level. I'm always transposing it to the SPY, but the 458 or 4580 or the 458 level or the 4580 level. Excuse me. I want to see if we can hit that based on today's report and stay there. On the QQQ, we need to go up higher. We've already broken past that level. We just need to now go to right here. Let me delete this. It's getting too messy here. This is getting really messy. All right, here we go. Less messier. So again, we're above the 50-day moving average. We had a big day on Tuesday because of JOLTS. We had good follow-through. Not good follow-through, but we had decent follow-through, although it was on lower volume, but it is what it is. The point is we had some follow-through, and we may come higher. But I think today's job report is going to set the tone. But I wouldn't get too excited or too bullish till we're above this level, the 391 level on the QQQ. That's a major, major level that we're watching right now and that we need to overcome. If we can't overcome that level, we're going to be in deep, deep doo-doo. So it's a very, very important level that we need to overcome in order for us to stay bullish. And again, the fact that we've been coming up here is a great sign, but the question is it going to continue? Is there going to be follow-through? But this week, the algos were very aggressive with communication, technology, retail, all the sectors that have been on the chopping block, if you will. So again, keep an eye on today's report. It's going to be very instrumental. Let's talk about global economy. And then I'll talk about, oh yeah, that's the other thing, bond market. So if the bond market keeps moving higher, it reduces pressure on technology, which is what it's been doing. But it's starting to get really overbought around here, and I don't think we're going to have a follow-through, and it's already down everything it lost yesterday. So I would be cautious, and if we start seeing this go down, those upside moves in technology will not materialize or will materialize with less certainty or force, and that would cause this to decline, and that would mean that would be a higher top than that, and that would be bad. That would be a sucker bet. So again, keep your eye on the bond market, because if the bond starts coming back down, it's going to put pressure on stocks, especially heading into the holidays. Sorry, needed to say that. Very, very important. So crucial non-farm payroll report is going to come out today with clues on whether the JOLTS report has legs or not. Salesforce climbed 3%. They had good earnings. That's very good for retail, consumer discretionary, technology. That means the economy is still doing well. That means that internet stores are still firing on all fours, right? Data from U.S. Department of Commerce Thursday told us that the PCE price index, their gauge of inflation, stood at 4.2, in line with expectations, but higher than a year ago. And it's giving us evidence that inflation is not coming down as fast as the Fed would like, which they're admitting is the case. Personal spending came in stronger than expected. Jobless claims fell. That was not really an issue. Bostic said yesterday that monetary policy is already restricted enough to bring inflation down over a reasonable period. Yeah, reasonable period. What's a reasonable period, buddy? That's why they're in a wait-and-see pattern right now. That does not mean I am for easing policy anytime soon. Inflation is still too high. It's a wait-and-see. They're now pricing in 11% that they're going to raise rates. They're not going to raise rates in September. But if economy stays this way and it remains sticky, the odds are they will raise rates going into November. And that's going to overshadow the market. And remember, September is not a strong month, which is why I'm very skeptical that we're going to break higher on the QQQ, because we're going into September and there's not a lot of follow-through or momentum, and the bond market looks like it's declining. So be cautious. Be very, very cautious. Europe, their factory activity, let's see here. They digested factory activity. Energy stocks outperformed after Morgan Stanley double upgraded the sector. I like energy right now a lot, and I have been liking it for a while. China closed higher, which is not going to give which will give us a little tailwind. Unexpected positive factory activity, that's good, boosted sentiment. Japan is keying off of US mostly. Investors scooped up undervalued stocks, shrugged off weaker than expected capital spending. Good. According to a survey released on Friday, Japanese factory activity contracted for a third consecutive month in August, but they're shrugging it off, which is fantastic. No major earnings today. Keep your eye on this bond market, folks. If you don't keep your eye on this bond market, it's going to be a problem. The question of whether the S&P and the QQQ are going to make swing highs, and when I say swing highs come up above this level, it's going to be very, very determined on today's data and how we trade today. Because if stops get hit over here, we can really bolt and bolt higher. I don't think it's going to happen, and I'll show you why. Small caps are not really participating all that much. That's number one. The rally that we saw after Tuesday right here doesn't seem to have a lot of volume or follow-through momentum. And we're going into September. We're going into September. Sorry, we're going into September, and the bond market's already cooling off. So none of these things are making me happy about what's happening. I'm not loving the current trading action, just FYI. Now, today's Friday. I'll give you a couple of day trading picks. Let's see what we got here. EOSE. Let's see here. All right, the stock gapped higher. Let's look at it. It's near swing highs. It's actually near swing highs, but it didn't break out higher. So here's what I'm going to tell you. If this stock breaks, listen to me carefully. If this stock breaks below 459, 460 today, sell it. 459, 460, all the way up to 450. Between 460 and 450, sell this baby. Sell it. Next one is ADTX. The stock is up. Look at this. It's crazy. It's down 49% right now. Let's look at it. So you could see it's been moving up, and now it's coming down. And my suggestion, I don't think this thing is going to hold. My suggestion would be, let's see here. Let's see, where did it close yesterday? Oh my. My suggestion would be right here. If this sucker goes below 25, sell it and hold on to it till it goes to 12. If it goes down to 25, sell it and wait for it to go down to 12. This thing does not have any legs on it, okay? Now, before I go, I want to remind you, Labor Day is on Monday. We're off. Make sure to like our channel, subscribe to our videos, post comments and questions. I will respond. If you have something pertinent, roger@rogerscott.com. Now, Labor Day is almost here, and that means Lance Ippolito will be ready to roll at 3 p.m. Eastern Time with 3 new trades, looking to take advantage of what he calls the long weekend effect. Lance has been using these long holiday weekends to let his trades cook a bit longer, often resulting in impressive wins. In fact, his weekend strategy has a lifetime win rate of just over 72%. That's pretty good. Even better, Lance is going live to the close on Friday, and then live to open after we get back on Tuesday. This is fantastic. He's going to be there with you during this entire period. If you've never traded live with Lance before, it's a lot of fun. Click on the link below for more details on how to trade live with Lance. Do it now and get in on the long weekend effect and have an amazing Labor Day weekend. Bye, guys. Send me emails. roger@rogerscott.com. Post comments. Join my Telegram. I'm going to be posting stuff during the weekend there. rogerscott.com/Telegram. Join my VIP room today at 11 a.m. Link above or below this video. I'll see you there.